all these countries that are accumulating treasuries, they keep the dollar too strong. And so I think part of what they want is for them to stop doing that.
See, Brennan, Joe Calhoun, back for another round of question time. And let's talk about the most widely held stock in the United States and what may be happening with it. I love this term. I heard it somewhere. Economic Armageddon. That makes me smile when I hear that. But Apple, 200 iPhones a year, most of them made in China. Since COVID, Apple's been trying to shift its supply chain, in particular to India and to Vietnam. Both of those have now come to the table and said, hey, we want to talk about the tariffs you want to put on us. And I know you don't have a crystal ball, Joe, but sifting through all of that, what could that mean for Apple going
Well,
forward?
first I'd like to say is, Bob, you are a strange man. Economic Armageddon makes you smile. It does not make me smile. Um,
I love the term. I think it's,
well,
you know,
I think hyperbole is interesting. People are coming out with, "Oh my God, it's the end of the world right now." It is not the end of the world. Look, just so everybody knows, we have clients who own Apple, and I personally own Apple. And I don't know, I don't think you guys do, but I do, and my daughter does too. She is actually an ex-employee of Apple for a long time, and now works for. She might have jumped from the fat to the fire, man. She worked for Apple for a long time. They're getting hit by tariffs, and she moved. She works for MIT now, and of course, universities are not being treated, real kindly right now either. So far, she's keeping her job though. Anyway, Apple. Yeah, look, they have been shifting production a lot to India, and some, I think, some of the has been shifted to Vietnam as well. I don't think these are things that are going to come back to the United States absent a very uh, concerted effort to employ automation. Put it that way. They are going to be building some things in the United States, so they have talked about making some big investments in the United States in manufacturing. President Trump has talked about that. On that, President Trump, if anybody has ever said anything in the last year about investing in the United States, he's taking credit for it, which, that's what politicians do. So I'm not sure how much of that is new is spending that they expected to do in the U.S., but they're going to be spending some money to bring some parts of their manufacturing chain back to the United States. Which parts, I'm really, quite frankly, not sure. Um, Look, I think that yesterday we thought last week President Trump said that he had had these good discussions with Vietnam and they had offered to lower their tariff to zero. But yesterday, Peter Navarro came out and said, lowering them to zero is not enough, and that they want to have other non-tariff barriers removed. Well, honestly, I knowing what Vietnam, I don't know exactly what those things are, to tell you the truth. I suspect that what they really mean is that Vietnam needs to police Chinese companies moving into Vietnam so that they could avoid tariffs from the last time Trump was in office. We saw that last time. China, we put tariffs on China. So what happened? Suddenly, exports from Vietnam went up. Well, no kidding. Chinese manufacturers moved to some production. And in a lot of cases, I think they didn't even move production. They just transshipped it via Vietnam, put a new label on it or whatever. And I think part of what they're asking for is for that to stop. Um, they've done a lot, I think, in some ways to try to stop transshipment. Although I have to tell you that the variable rates that they put out last week make it easier in some ways. So, but in the case of Vietnam, it's not going to be easier. I think the rate on Vietnam, I think, was 47% or something like that. It was a big number. India, I don't think got quite that big a number, but they got a big number too, I think. But look, all of this is subject to negotiation. Now, with countries like Vietnam, when the Trump administration says that if you're running a trade surplus with us, we're losing. That tells us that they're not thinking about comparative advantage. Look, Vietnam's not rich enough to buy enough stuff to balance trade with us. It's just not going to happen. If you think about whatever tariffs they have, even if they drop them to zero, it doesn't do anything for us because we don't buy much from Vietnam. But Vietnam can't buy much from us because they don't have the money. So where's that money been going? Well, the money's been going into treasuries. Vietnam's stash, their foreign reserves, which is in the form of U.S. Treasuries mostly, has been climbing because of all this manufacturing that has shifted to Vietnam. And I think part of what the administration wants is this is part of Stephen Moran's thesis that he's the head of the Council of Economic Advisors. He says, look, all these countries that are accumulating treasuries, they keep the dollar too strong. And so I think part of what they want is for them to stop doing that. And I think I think it's a dangerous strategy, by the way. I think it's, I think it's very difficult to tell people, tell foreign governments, don't accumulate treasuries, but here we need to sell a bunch of treasuries. I'm not sure how you square that circle. But the bottom line is that they are going to negotiate this stuff, and it's going to be negotiated with India. It's going to be negotiated with Vietnam. And Apple is still a great company, and I think it'll be fine. But is it still going to be worth 30 times earnings? Maybe not. Maybe their profit margins are going to get squeezed some. There's going to be some changes there. And that's part of what, the goal of the administration is to make to force companies to make changes. When we squeeze their profit margins, they'll make changes. And I think that's what's going to happen. So is Apple still going to be worth, like I said, 30, 35 times earnings when it's growing at, less than that, a lot less than that? No. Look, it took a 15% hit in the last, this month so far, maybe 16%, something like that. Um, and it's still 26 times earnings. It's still expensive. And so I don't necessarily think this is done. You may get a bounce here. Maybe it does. Maybe it doesn't. I don't know. And this is not advice. If you own Apple, you're going to have to make your own decisions. I think this is going to happen with a lot of these companies that manufacture outside the United States. They're going to get squeezed on margins, and the multiples on these things are going to have to come down. Look, this has been part of what we've been talking about for a long time about how vulnerable the S&P 500 is because of their reliance on these big companies that manufacture outside the U.S. This Apple's a great example, and it's widely owned, but it's not the only one. Now, some of the companies in the Mag 7 are not in that boat. Um, I don't know that Google, for instance, I don't think does a whole lot of manufacturing. So it's basically an ad company. So I don't know if that makes that much difference to them, but it does matter to a lot of these guys, and it matters to a lot of the members of the S&P 500. And so we'll see what happens here. We're getting a bounce in the market today. I don't actually probably really don't know why, other than we were oversold. And I suppose I guess we could say too that there are some indications that there's serious negotiations going on. We know that the Japanese are sending a group to the United States to negotiate with Secretary Bassett. That was announced yesterday. So I mean, there are things moving in that direction. It's going to take a long time though. So we'll see how this goes. I will say this: I'm not selling my Apple. I'm not selling it here. My capital gain's pretty big, and I don't want to pay that right now. That may be a mistake. I don't know. I don't think so. I still like Apple a lot. Listen, I've got an iPhone, I've got an iPad, I've got a Mac. I'm an Apple guy. That's what I am. So I'm not gonna jump ship just yet. But everybody's gonna have to make their own decisions about these things, about what companies are willing to, to kind of take the pain with here. We think Apple's a good company. We think in the long run it's fine. Maybe it's not as innovative as it was when Steve Jobs was there, but you know what? No company can replace Steve Jobs, and it is still a very, very well run company. So we'll stick with it, but maybe some more coming.
Steve, Joe mentioned shrinking margins for Apple as a possibility. I'm not sure that they can absorb all of that. So I'm thinking there's a consumer piece to this too. I read somewhere that the price of an iPhone has the potential to go from about $800 to, $1,100, $1,200.
Well, yeah, sure. And well, there's questions on how much would they absorb, allow cut into margins, how much would they pass on? There's a lot of uncertainties still here. What are going to be final tariffs? Um, yeah, about 90% of that iPhone production is coming out of China. They do have other countries where they're producing, and we may not see the same. Well, we're already not seeing the same tariffs opposed everywhere. So there's a lot of math you're going to have to figure out here. But it's hard to see this as a good thing for Apple. Uh, and I would say that, the question isn't necessarily, do I own it or don't own it, especially if you own it. It may be like, take a look at how much you have. I know people that they've just got way too much exposure, in my opinion, to this stock. Now, it's a different matter if you're sitting on taxable capital gains. You got to take a, and you've been holding it for a while. You got to take a look at the tax consequences. And that's where I'll do a little plug for us. An advisor will sit down and work through all those numbers with you, including the tax implications, including the concentration risk, including everything. But hey, I haven't made, I haven't really hidden some of my concerns about Apple. And it kind of goes to what Joe's talking about. It's really expensive. If I have good products, good company. If this was a cheap stock, I think it's a no-brainer. It's down about 25% for the year. If it came in like reasonably priced or and it's gotten cheaper, I'd probably be a buyer here. My big issue with Apple is it's really expensive. It's got sluggish growth. Its profit margins are really susceptible to this sort of thing because of how it built its cost structure. It really went all in on China as far as production there. And the thinking there was, China, what a lot of people were thinking, China was going to become a member of the global economy, and globalism was, that was the future. We were never going back. China was going to have a growing middle class that you wanted to get in there and be able to sell because it was going to be the biggest consumer middle class in the world. And you could also take advantage of the low cost production. There was really nowhere else to low cost build stuff. Well, all that stuff's turned out to be wrong. They made a whole huge bet on their company on something that's turned out to be wrong. And then to Joe's point, they stopped being innovative. Um, they really, since Jobs went, they really haven't come up with, that innovative products. So, my big issue with Apple is I don't think all of that was figured in to the valuation. When I looked at the valuation, it looked like it was still pricing in a pretty much of a best case scenario. And that's one of the reasons why I think that the stock's down about a quarter this year. And a lot of it, really most of it, came after that tariff announcement that really put into question the entire cost structure the company was building. And on top of that, they know that. Cook's been trying to get out of China, but when you make as big of a bet as they did that was intended to be permanent around manufacturing and production, you can't unwind it overnight. So I think part of it right now is the market's starting to price in more fully some of these factors. But I would say don't be emotional. Don't panic and sell, but also just because you love the product, don't buy the stock. Take a look at what you're holding, the tax consequences, what your concentration is, and if you have a good advisor, maybe it is time to like look for opportunities to pare it back a bit, and buy some stuff that doesn't have some of these same risks. But I wouldn't give any sort of blanket recommendation or blanket guidance other than if don't fall in love with a stock. And don't fall in terror with the stock either, but get the emotions out of it. Look at what you're paying for the thing and what it's doing.
I've heard both of you say it. Steve, you just said it. Joe, in a conversation we had yesterday, you said hold tight, don't sell. And that sounds like that's the key advice at this point. You don't want a knee-jerk reaction. You want to make a well thought out decision based on facts and figures. Is that still a good
Yeah,
advice?
nothing's changed. I mean, look, we don't know. We can't predict the future. We just can't do it, and nobody can. And we don't know what's going to come of these tariffs or how they're going to come out. I will be publishing a paper fairly soon, hopefully in the next few days, kind of an overview of what I think they're trying to accomplish and how they're going about it. And there are investment implications to that. They are tactical, though. They are not necessarily strategic. And what I mean by that is it doesn't mean that you need to sell all your stocks and go away. It may mean that you need to sell some U.S. stocks and buy some non-U.S. stocks. But that isn't the same thing as saying, I don't want to own stocks. Stocks are volatile. That's what they are. That's why you get a higher return on these things. If they didn't have the risk, if they didn't have the volatility, you wouldn't get the higher return in stocks. So there's good reasons to own stocks. It's just a matter of which ones do you own. And that's kind of what this discussion is about Apple, about do you want to own Apple and do you want to own it in the quantity that you've owned it in the past? And I will say too, in my own personal situation, I've sold stock over the years in Apple. I don't have a huge position in it, but I do have for me, a fairly large position. But I don't think that, Apple has been valued where it is for a lot of reasons. It's not just about earnings. There is a difference in cash flow versus earnings. And I will tell you, there are things that I don't If Steve Jobs was alive today, he would not like. For instance, taking on debt to buy back stock, Steve Jobs would have never done that. But he's not here anymore. Tim Cook is, and that's what he's done. So I'm not, I'm not I say I'm a fanboy, so to speak. I like Apple. I use their products, and I think the quality of the products has been maintained. Uh, I agree, though, that the innovation is not what it used to be, and we do need to see something out of them. And look, I'm kind of at a point with the stock. And listen, we've owned it for a very long time. We have clients that have owned it. One client in particular has owned it for 20 years. We have clients who've owned it for back to as a firm. We first recommended it and bought it in 2013. So, that's a long time ago. It's a much different company then. Um, but I would say too, again, about what Steve said, don't panic. And the reason is that you don't know what's going to happen. You don't know what's going to happen with the tariffs on Vietnam and China and all these other things. We don't have any idea what's going to happen. We don't know if maybe Apple gets some kind of exemption. We don't know. They did in the last time that they did this. I would also say too, in a weird way, the tariffs will have a great impact on near-term earnings because everybody who wants something from Apple is running out and buying it right now. In fact, what we've seen is news out of Apple stores is that they're swamped. Now, it's not good long term, obviously, because if they're buying them today, they're not going to be buying them tomorrow, and the price is going to be higher tomorrow. But that's the part of what's going on in the economy right now is about front-running tariffs. And especially now that we see these big, big numbers that they're talking about coming on in just tomorrow. So people have been rushing out. Maybe it's good for earnings this quarter. It's not going to be much good, after that. So I don't know. We'll see what happens. We're getting a rebound in the market today. I think a deserved one. I think it was a little too much. These tariffs, I don't expect that the published numbers are going to be the end numbers. I actually think that what the administration is really aiming for is to get down to that 10% number. I think when this is all said and done, and it may be months, it's not going to happen quickly, but I suspect that when all this is said and done, the vast majority of countries will be at that 10% level, some even less maybe. And there's going to be a handful of countries that are going to be higher. And they're going to be higher because they're not going to be willing to do whatever the administration wants them to do. And so that being the case, look, 10% tariff on the rest of the world. Look, I'm not a fan of tariffs at all. I think there are many better ways to tax people. I think it's a distortionary tax that we could raise this money in much better ways. But this is what they've chosen, so we'll have to deal with it. A 10% tariff, it's not good, but it's not a disaster either. It's something we can deal with. It's something that companies can handle. You raise the cost of their inputs by 10%, they can handle that. They can eat it either in margins or they can raise prices a little bit, do a little bit of both, and everybody's fine. 50% is a little harder to deal with. And right now it looks like it's 50%. So wait and see where all this stuff plays out, where it ends up, and not where it is right now, because this is just a starting point.
All right, thanks, guys. And we'll give you more information when we know when Joe's paper is ready to be published. And in the meantime, you've heard us say it before, we have a strategy here. If you're panicking, if you're concerned, let us know and let's talk to you about our strategy. You can let us know at info@alhambrapartners.com.